It's kind of interesting the timing because we'll get into the markets, but it looks like we may see a pullback maybe in March and June into June.
Yeah, I'm curious to see where you get that. I guess I'll call it an opinion, or where you get that. Well, I'm always interested to see how you come to these conclusions, or whatever you want to call them. Predictions. Sorry, there's the word I was looking for. Because to me,
well, no predictions. These are, and we'll get into it. So trading is not. I don't see it as making predictions. Just making plays based on high probability.
Okay. Yeah.
Because I can't tell the future.
Statistical observations.
There you go. There you go. All right. So on that note, do you want to get into charts?
Yeah. Please take it over.
All right. So this is Trading View. Let's start with this. So we got a clean chart.
Mm-hmm. And this is what? What's the chart that we're looking at? SPCFD.
SPX. So that's S&P. Yep. That's the index. So I'm just gonna make a watch list for us. So I'm gonna look at SPX or SPY, which is just the ETF of it. So can you see the chart fine?
Yes, I can. Yeah, what was it?
Go ahead.
In June? What's our time frame here? Are we doing month?
Well, I'm gonna start the higher time frame. So let me go. Well, that's too long, but it's a great chart. If you're ever scared of parabolas, just give yourself a look back to 71.
Goodness.
There's your parabola. Now I think a monthly is probably going to be best. Yeah, that's good. Okay. So let's start putting some context here. So obviously you have these lines that are relevant. Now, what I want to say is, go ahead.
You're setting that yellow line that you have right there is that double top, I guess. Is that what you're calling it?
Yeah, I don't want it to break down below that. I mean, just take it one step at a time. So this is how I usually look at a chart. So I go to high time frame. I want to understand what the structure is, where my breakpoints are of structure, things like that, my supports, my resistances. So I can say somewhere around here is my lower support. Granted, there's not here.
Is there a name? I'm seeing that's just the higher line that you just placed. It kind of seems to touch at a peak, but also at a trough.
You mean on the left to the right?
Yeah. Is there a name for that? Like the one below would be a double top, right? Because it's like two peaks. You're brushing across two peaks.
Here? No. So
no, the one below that. The first yellow line you made. Yeah, that's like.
Okay, so there's no. I personally don't believe in double tops or double bottoms. That just gives you. So think of it this way: the more that you touch a support line or resistance line, it's kind of like you're eating at it. So the more times that you eat at it, the more chances the more likelihood that you're increasing the probability of breaking it. So the fact that it hit like a quote unquote double top, you kind of keep your eyes on it. Once it gets near it, you may want to buy.
Yeah.
Same thing when you hit a double bottom, I guess, if you want to call it. See if you have anything like it.
So, and just to clarify, you personally are strictly technical. Like, do you find any value in fundamentals? I mean, to me, when you had this on I think you had it on the yearly, right? At one point where it was like, it seems to be from 95 up until now, you have this massive climb, probably even a little earlier. And would you say that's fundamentally because of the tech boom? I mean,
well, you can involve fundamentals. Sorry, this is just my opinion. It's just an opinion, so I don't have anything to really back it up with. It's just based on me trading and hearing the news, watching the news, seeing how the market reacts to certain things and the timing of it. I feel like ever since computers came about, internet rather, fundamentals has just gone out the window. So everything's just become more technical based.
Okay.
So you would actually see, and this is my experience. I could be wrong, but it's worked so far. Is that your chart will show you your analysis will show you the moves before the news breaks out. So it kind of goes in hand with that saying, show me the chart and I'll show you the news.
Right.
So to your question, I find that technical analysis it's much more clear than news are.
Okay.
For example, how do you explain that a higher unemployment number is going to cause a price rise?
Yeah.
Just an example. All right, so let me go back to the monthly. I was going to show you here. So now I'm just going to look for geometry. And now that's a log. Okay. I like this data. Okay. So the narrative seems to be that people are scared of this the current market, and there's going to be like a big bubble pop and blah blah blah.
Mm-hmm.
Oh, so much despair coming, right? I don't see that, and it's kind of wild, and it's hard for me to even follow that. But when you're trading, you need to leave your emotions aside.
Right.
So what I've been showing, even my coworker who keeps talking about doom and gloom, I can't get into that narrative of things are just gonna die, I guess. However, I do see a pullback coming probably, but this is an uptrend. It's an uptrend until it's not. That's kind of how bull markets are, and they're just going up. Whether it's manipulated or not, that's just what the chart is. It's still structured pretty well. Now, if we go back to a lower time frame, sorry, this is starting from scratch, so I'm not.
That's fine.
That is this white and yellow. So we're still in an uptrend until we break this channel, in my opinion. This is all opinion, but we're getting close to the top of the channel, and that's what I'm kind of keeping an eye on. Let me just make this a little bit more perfect.
Yeah, that makes sense. So you would expect it to just barely skim that top and then come back down. I mean that the lower white line that you have seems to only touch. I see the 2 points you got there. So you're taking like the lowest of the lows in the uptrend and creating a trend line.
Yeah, so I think technically, and this is what I'm kind of debating myself on. So I'm either putting my lines here, and we're there, or I'm taking the very top, which it's kind of debatable. Maybe, maybe not. So you want as many points as you can to fit your channel to make it relevant. So for example, we found your bottom here, we found some sort of resistance around the zone, and then support all along the medium. Once you break the medium, you need to bounce, you're going to go and aim to the bottom of the channel, and that's where you kind of hold your breath and hope that it bounces back up above it, and you want to get above the median to continue. But as long as the bottom of the channel holds, you're fine.
Sure.
However, this is a resistance point. But now looking at your historical, and I think I need to get a bigger screen to make this fit. So you got your historical back here, the bottom. And this I need to adjust a little bit. Yep, so your medium is relevant here. Just fluctuates around it. Top. Once it breaks down to the bottom of the channel, and then up it goes. So here's my concern. Well, not a concern. I guess it's just my interest. Currently with what's happening here. The zone right here. And it just keeps grinding up. Right? Now if we go to daily, you can probably pinpoint it a little bit better. So I remember the narrative back here was that people are looking at this as a bearish pattern, I guess, where if I do a replay, you can see why, I guess. So a lot of people are drawing this. So it's a bearish thing if you do have this sort of megaphone pattern where the price breaks out, but then it's too weak to stay above the trend line here.
Okay.
And then you're expecting it to fall down over here. However, it's a little bit premature to do that because the way that you play these is you have to wait for the break, and then you would aim kind of that, which if you look further, and it was kind of valid, but it was too early to tell. Sorry, I got to do here. Have to move. Yeah, so it was around the resistance, which would be a support. So I could see how that was valid back then, but it was too early to play that. So a lot of people got caught either not putting positions back on or selling and just watching this go straight up.
Yeah. So I have a question. These lines that you're making, I mean, this is all past data, obviously, because there is no future data, but typically, I guess the trend line that you're setting, you're basing off of your trading time itself. Like if I were day trading, do you think that I should be looking at patterns over the course of a month or maybe shorter time intervals? I mean, I guess it depends on how long you intend to hold. Because I mean, I would assume that and I'm not really assuming, I'm pretty sure that the trend lines are always dynamic.
Okay, so horizontals are more objective.
Okay.
Diagonals are more subjective. So diagonals is really subjective because it depends on what points you choose. But horizontals are based on your market structure, your order blocks, where most of the trading happened, and you can validate it with volume. So you can see most of the trades was here. So this is a pretty relevant zone right here. For example, find resistance. You consolidate around resistance, you're going to break it, and then you come back down. This should hold. If not, then it goes straight down. Probably this a one-to-one move, which kind of looks like it here. And then once it gets above it, retest, holds, and off to the moon. So so that's the point of horizontals. Then you do geometry, which could be subjective, but that's why I'm trying to use other tools to validate that. And I'm trying to paint some kind of narrative to be able to try to understand what is potentially going on. Does that make more sense?
Yes.
Let's see. All right, so these numbers right here, they're basically algo targets. So algorithms have Fibonacci's kind of built into them. And they may change, but nature doesn't really. And Fibonacci is based on that. So you can see a bit of confluence between this area, and I can probably close it in more. Are you going to the bathroom or something?
I was pouring myself a glass of water.
So your first target, my first target would probably been up here, right around this area, but we overshot it. So now I'm kind of around here. Now, if I go back to log, that seems to be the top of this channel. So somewhere around here. So the reason why I'm going back and forth is that in this, in trading view, you're better off using Fibonacci's when you're not in log.
Okay.
Because log just kind of squishes price down to be able to fit in your screen, so to speak. So I'm putting my Fibonacci's in arithmetic, and then I'm going back to log to check my my channel here. And what I'm seeing is that based on the two channels I have, so this is my historical and this is my current.
Okay.
And what I can see is, and this is just speculation. So I could see, oh, not that. I can see something like coming down to here and then kind of like consolidating a little bit, shooting up. It all depends on time. So you have two factors. You have time and you have price.
Okay.
You want price to consolidate, but take as long as it needs. The longer the consolidation, the bigger the move in one direction will be. So for example, if we go to Tesla, there was all this. You had, what, 6 years?
Yeah.
Something like that. 2013 to, 2020, you would say? Yeah. So you had 6-7 years of consolidation. So there's a pretty good run up. So you have to factor in the two. So you price corrects either with time or with price. So think of it this way: the higher the time frame, the more relevant it is. So if you have a downtrend on the high time frame, your lower time frame may go up, but it'll eventually come lower.
Yeah, that's like setting your moving averages to higher frames, right? Like if you do like a 200 moving average versus like a 5 moving average.
Yeah. So you are, yeah. So the higher the time frame,
trying to get a broader perspective.
Right. So you're trying to find a trend.
I guess my question earlier though was that like if I were to be day trading, would that be as relevant?
It would be in the sense of your trend. So it's important to understand, like if you have an uptrend, okay, so I have an uptrend in this, you're day trading. So you want anything below a day, obviously. So ideally, if you're going in and out of the trade, your trend is typically dictated by like a 4 hour if you're doing stocks.
Okay.
As far as pivots, but yeah, obviously you want to look at your daily to the weekly. If you're swing trading, you want to go as far as you can.
Sure.
As depending on how relevant it is. Like if you have a stock like Tesla, for example, I mean, this is relevant, but you don't want to go to like a 12-month because then you have like 4 candles, But if you go to SPY, it's kind of, you can see how it looks similar to how this does, but on a monthly. Right? So you just got to find what's more relevant. So I'm going to add more stuff to here. So these are my indicators. I have dynamic momentum, which I can explain, and these are just simple and exponential moving averages, which is all part of a strategy. I am not selling snake oil. And not make any money out of this. So this is just not financial advice, but it's interesting. So let's see. Why is this not? Oh, because I'm using. Okay, I get it. So I need to go here. I'm gonna use Fibonacci's. If I'm using it daily, I'm probably gonna go to the month. And I know it looks a little busy, so just bear with me.
So I don't know if it's distracting for you to answer this, but myself being an amateur, and for those that are watching that may be amateurs, what is the significance of Fibonacci?
It's life. It's just I guess a mathematical way to explain things.
How does it help you?
It gives you so Fibonacci just comes from like a sequence of numbers. So some of the preceding ones or something starting from 0. It's just a mathematical way to, I guess, explain nature, something like that. Like you can see how it's relevant in natures, like petals of flowers, how daisies have 13, lilies I think are 3s, something like that, and
Yeah.
you're seeing in snails or things like that.
It's like a momentum kind of. I mean, the golden spiral. Like I'll use it in photography to some extent. So it's more like a proportionality. Not even proportionality actually, but it just kind of shows trajectory, I guess. Is that what you're saying?
Yeah, so it simulates like a range of patterns. So like in living things, for example, you can explain it with biological processes like natural selection, for example, shapes, things like that. It can be derived with Fibonacci's. There was that joke with Trump's head. I'm sure you've seen that meme.
Should pull it up.
But yeah, it's a Fibonacci sequences, spirals, and golden means. You know, those are like numerical patterns that can help project different patterns. And I can use that to kind of put a logical structure through mathematics that has been proven through nature and art. You know, with yours like beauty and proportion, things like that.
Right.
So yeah, I'm using it to look at this beautiful chart. But that's just a tool to use for projections. So it's good to see them like for retraces, things like that. Like
right.
For example, if I did something like this, where's my 0? Try to find my 0. All right, so typically on a retrace, you're looking for like a golden pocket, which is between a 618 and a 65. So about 60% of a retracement, and that's where it hits right there.
Okay.
So I use them because I find them relevant.
Okay.
And it's kind of the basis to everything. So all these tools are math-based. I know a lot of people put down technical analysis as just drawing lines and fortune telling, but it's all math based. It's just the way that you use it, and I can see why it gets a bad name to it, because people just draw lines and don't really understand what they're doing, and it just looks good, I guess. So what I have here, so this is before, right? So this indicator, what it shows you is these are supports, resistances, the white one's the pivot. And these are just through an algorithm that I have here. It's just showing you supports and resistance lines, which also gives you projections. It's kind of interesting. This one falls right there with the 618. So that's my 4th resistance. I don't think I have anything higher. And this is the area that I was kind of kind of concerned about. That's my relevant point. And we shouldn't fall below, well, we can do, you know, the market can do whatever it wants, but for the structure, we shouldn't fall below this area. So I'm just gonna put this up here a little bit closer. We can wick down to here, but on a close, I guess on a weekly close, we shouldn't fall below this area. Just to be open on this, I don't do this for a living, but I am successful with it. And I haven't done this for YouTube, so bear with me while we figure out our own pace, right?
Yeah, this is the first.
So
first
this
of
is
many.
yeah. So part of this indicator that this is my edge. You know, I'm sharing with people, but these are my own tools. So part of this has your simple and exponential moving averages. You can kind of see what they entail by color base on the right. And that's the labels for each of the lines. So you have your 10 simple moving average, your 21 exponential moving average, your 50 exponential and regular moving average, your 89, and your 200s over here, and your 377, which is part of a strategy, which I'll explain, I'm sure. Now, the way moving averages are, it's literally what the name is. It's just an average of price moves. So for example, a 10 moving average, this one is simple. It's using 10 bars of price and averaging it out, and that's where it moves. So on the next tick, it'll just average out this price plus the new price. And the same thing with exponential, but it's just an exponential of a simple. Now on top of this, these dotted line, these dots that are here as part of each of the moving averages, these are projections. So that's using, it's kind of like, it's not permutations, but it's just projecting what their price would be based on current price action. And the difference between these projections and anything I found, at least available for free through TradingView, is that these are more static than the other ones are.
Gotcha.
So I have like a filter in the background running. And on top of that, I have this, which is my momentum indicator. This uses so.
I'm sorry. You're saying this. What are you referring to?
I'm not. Are you seeing my chart?
Yeah, just saying because I see. What is this on the bottom? Is volume or?
Okay, so yeah, I'll explain that. So here is the line where it breaks down your indicators over here as an oscillator, and then the price with the other indicator. So now I'm going to just expand on that oscillator indicator on the bottom. And I hope you're not hearing all the typing. That's just my wife working on her paper. Going at the keyboard there. So my dynamic moving indicator, most of the indicators that I've come across and I've learned and tried to apply through a strategy and back test are two-dimensional. So what I mean by that, it's either using time and price, or price and volume, or that sort of thing. You know, like RSI is just relative strength index, which uses volume as well. Whereas this indicator is more on a three-dimensional phase. So not to get too into how it works, I guess, the secret sauce of it. The bottom is showing you your strength of the move, and what it does, it helps you rule out any false indications. So a lot of times you get these, like for example, if you use your MACD, you know, a lot of people use MACD the wrong way. They think that if it goes negative, then that means, you know, it's going down. It's not used that way. You have to use it with price movement. So price will validate the MACD, not the other way around. So that's kind of like giving you a false indication. So you may trade with it following the trend of the MACD, but the price is not moving accordingly. Whereas this, you have your crosses between the slow and the fast line here, the teal and the, I don't know what color that would be, violet, the pink. So between the slow and the fast. So when the fast goes below the slow, then you're going to come down in price. But you need to look at the strength and see that it's going negative, and negative in relation to the base here, the 0, 0. Now, if you zoom in, you will see the oscillation between the active and the base. When this expands, as this is crossing over, it tells you a pivot. So let's validate that just so you can understand it a little bit better. Why do I keep doing that? 1 week. Okay. So now let's do something that's more dynamic. Let's go to Bitcoin.
Dun, dun, dun.
Let's do Coinbase. All right, so I'm going on the oscillator. I'm not looking at the price. Bitcoin, you have to do 3 days. Yeah, for Bitcoin, you have to do 3 days. Okay. So here was the Bitcoin bottom right here. Let me take these lines off, or actually move them. So you would have gone long here, right there. And you would have sold. And the bands are squeezing to turn down right here. Yeah, the 3 is a better chart right there. And that's right around here, the zone. And now this is an oscillator, which obviously with any strategy, you have to find confluence between different indications.
Okay.
There's not going to be, and I dare anyone to show me, there's not going to be a single indicator that will find you every single top and bottom like perfectly. You have to find confluence with other indications to kind of narrow down your points. So now these vertical lines, I'm looking at the oscillator and I'm looking at the strength. So this is not like Bollinger Bands at all, and the reason why it's B is because they're bands. So this is kind of like following volatility, so to speak. So once it's squeezing, there's going to be a major move to the opposite end. Once it's squeezing, is the major move to the opposite end.
Question. So you have set most of these vertical lines are set at crossovers, right? Where the slow and the fast kind of overlap or they cross one another, but you haven't necessarily chosen everyone. So could you, I'm sorry if you answered this already, but could you explain why you chose those specific areas? Those specific points?
If you look at the higher time frames, you'll be able to find like where let me just zoom in. So if you look at the strength, see how it expands from the base. That means there's going to be a pivot coming. And I'm sorry if I'm not explaining it. I like I said, I haven't done this in a video, but
that's fine.
Since I use it a lot, I can pick it out.
It's second nature for you.
Yeah, I can pick it out before going to like a higher time frame. So I picked this out on a lower time frame, thinking that there's going to be an expansion between the base and the active, which is marking a pivot. Same around here, where we had 1 and 2 points, but we picked the second one because this came back down and retested the band. Then over here, same thing. There's that expansion, slight expansion. It's a little weak. And I probably wouldn't have taken this one right here because it's on an uptrend. So horizontals work a lot better in oscillators, than they do in price.
Okay.
They're a little less subjective. It's kind of weird. Same with patterns. Like if you see a quote unquote head and shoulders, it works a little differently in an oscillator. I can show you on the 3-day, I guess. Yeah. Sorry if anyone's getting a headache from me moving the chart around. Yeah, something like this. Where you would do that, mark it down, and boom, there you go. Right. So kind of like a head and shoulders, but on an oscillator base. It's a little different, but that it works. I don't know why, but it just works. But that's how I pick these pivot points. Now looking at the price, kind of mark down this area, and this is just for a swing pattern. Then we can go down to a lower time frame if you wanted to be more active trader. And it works well with when you're scalping at a lower time frame. The reason why I'm explaining this is because if I'm going to use it in my technical analysis or in my charts, it's going to be more relevant. So if you understand to begin with how it works, then you'll be able to just kind of follow along. Yeah. Okay. So now that you know sort of the gist of how it works, right? So it's marking pivots. Let's go down to like a 4 hour. Nope, there we go. Okay. Sorry, 12 hour. Crypto's a little different. So let's say we were looking at, you wanted to day trade this, right? So I'm looking at this. Now see how I have a green line and a red line? So
yes,
that's also Fibonacci based. So that's marking my bull zones and my bear zones. And you can see it on the indicator titles on the right.
yeah,
So if we're bearish on this time frame, we're going to stay below the bear zone. Anything in between is a no trade, unless you got in at the breakout.
okay. Gotcha.
Now, if you want to continue the trend, you need to get above the other line. So like if you're short, you're gonna, this is squeezing, it's getting tighter, you're gonna get a move. So you're looking for these crosses. You're gonna short this, sure. And then you got to watch your price and see where you're going to go. Typically, when you hit a bear or a bull zone, you get a bounce, whether it's a retracement on the opposite end or a bounce on the bear zone. But the price tends to react. So then let's say you do end up shorting here and you end up getting out on the second drop here because you went below the bands. And I can explain that. This is your play. Now looking at the price, you ended up shorting very near the top because the price actually went here, that horizontal. So you end up shorting there. Let's say you got in late. Even if you got in late, you made 18%. And this is kind of valid, actually. If you look at patterns where you drop, you bounce, you're looking for a retest and for it to create a higher low. So you can try to create an uptrend. But once you cross this, if you follow just patterns, once you cross a previous high, now you have a higher low and a higher high, then you have an uptrend. And that's where you would typically get out of your short if you caught it early. But with this kind of like 3D view of an oscillator, got you in the candle before.
Gotcha.
So basically on the higher low. As far as the strategy, my favorite one is that price tends to retest the 10 simple on an uptrend. And if it breaks down, you look for a bounce at the very least on the 21 exponential. Okay. And then you get out on the bounce if you like, if you're just scalping, or you stick to it until the bottom breaks because it might follow through. So for example, what's a good example of that? I guess it's better on the 4 hour. So for example, here, if you get a break, you can basically, I don't suggest this, I'm not advising anything, but you can take a shot at punting along at the 21 exponential. Let's say you did it right at the line because you can get perfect numbers on the right. Let's say you did it right at the line. Then you're basically riding this out because you never got stopped out. You got above the 10 exponential, great, just keep writing it out. And unless it comes back below and on a close below a 21 exponential, like here, for example, there's not really anything to worry about. That's just one strategy. It works well on the daily, actually. So I remember playing this one. I hit, I bought it 30K. No, this one was 30,800. And then I just played it to a 10 simple. And then rebought the 21 with a stop loss right below it. 10 simple again. Based on my oscillators, it was telling me that we're kind of starting a downtrend. So that's why I kind of scalped it. And then I rebought at 29K. And I think it went below 29. What was it? Yeah, 28.7 in this exchange. And I sold early. I sold on the Elon Musk pump. And I haven't looked back on here. Are you trading crypto?
Yeah, I got Bitcoin. I bought in. I mean, I only put in a certain dollar amount, but I bought in around 48, and it's almost 10,000 above. I mean, I think it hit 57.2 some point in time today.
Things just on a rampage. I mean, it's bullish.
Well, you know, and a lot of people, a lot of these big name investors are saying, "Oh, it's going to hit 160, blah blah blah." So obviously, that's gonna, you know, people are going to jump all over that.
Yeah, you start to see influx of retail traders. I think I was telling him about Tesla. I think he was buying it. So we hit a first resistance with these Fibonacci projections, right? We have this very steep uptrend. However, we're negative on the strength here. And we're sort of coming back to the bands. Now, if I go to the weekly, I think I told them around here. Yep, and this was my reason for the 875 to 900. Yep, right to the top as a potential top for me. So because this weekly did not close above the R1, I could not look towards the R2. So now my first target was going to be the 10 simple, which is down here. And looks like we closed right below it, which is not necessarily good, but it's not a death sentence in itself. We need to get out of this area. And it's problematic that we closed below the pivot. So we potentially could be breaking structure. But we got to see how this plays week to week, actually. Because right now it's not looking good. Bands is squeezing, sort of turning down. It could be a start of a downtrend. And right now we are hitting our bear zone. So we could potentially see a pop. So maybe a bounce up to the pivot point. Kind of retesting this drop into this order block area. So what I could see is, because there's not much support or resistance or price action here other than just straight up. Let's go down to the daily. Oh, this is not good actually. So now, if you recall, you guys recall, I mentioned that it's a good strategy, and I did play this with options to aim for the 21 simple if you get a break of the 10 simple. I mean 21 exponential, sorry. If you break the 10 simple for a bounce at least. And we already played that. So the next go around is a little bit tricky. If you want to play that, I would personally wait to break the previous top because that will just continue an uptrend. I'm more of a conservative trader, but because we fell below it and broke this previous low, now we found support at the 50 MA, so the 50 moving average. And right now it's retesting this move. So what I can see This is just speculative, not financial advice. We have this move up to retest this cross right here, which is going to happen as soon as we open on Monday. The only way that this will invalidate is if we, excuse me, if we go straight up to like 840 or beyond that. So we would need to break this high right here. Then this will curl up as this comes down and then eventually comes back up. And then we'll regain an uptrend, kind of like these moving averages are doing. But because we haven't done that yet, right now I'm a little skeptical to this move, and I'm looking for a move from here to test this up here. And if we don't get above this cross, it's going to be very, very bearish. Still not a bad thing until we break this low though, but it's going to be bearish. When this crosses, the 10 simple crosses the 21 exponential, especially on a high time frame than daily. See how this moves the price back up. I mean, the simple move, the 10 simple moving average bounces away from the 21. That's good. That's good. Once it crosses, if the price meets up to it, you're going to see more downside. And that's what I mean. It's kind of bearish. I'm looking for a potential top there. I'm not sure I'll go beyond that. And it was up to you to sell or not, but it hasn't come back up.
Right.
People are probably going to start looking at this thing, and just be aware. People are going to start looking at, oh, it's going to be a bull flag, right? Problem is that if we can't get above this area right here, and I'm going to put a yellow horizontal. If we can't get above that area, this is null and void kind of thing. And we could see a move down, probably lower. And now let's bring in volume. Bull range. Okay, so yep, so it's straight down. There's absolutely nothing here. It's just void. So if that doesn't hold, you're looking probably around there. Then we'll see what happens. Now let's see if we can find some structure to this. Okay, so if we get below 740, yeah, next leg down will be over here. So in order for this to become true, we need to get below this area.
Okay.
So I'm going to put a line here and a line there. So two scenarios. One would be the white, the bullish scenario would be that we go straight up to here. I'm going to make that green. So when you're trading, you always want to make half different scenarios to know what could happen, and it's all dictated on price action. Price action is king.
Okay.
That's basically what I'm looking at. Okay, so look at something like that if it's bullish, but it needs to get above this pivot. This is very important. The white is just my personal opinion, more so than a play, I guess. The bearish look. Let's see. So now it's just getting a little crowded. Whatever. All right, red. All right, this is for you bears out there. Is that your stomach?
Yeah, I'm actually pretty hungry. It's about dinner time for me.
I'm just gonna draw a red line. I'm not gonna even bother with that because I think the white is pretty telling. It's from there to there would be my white. So two scenarios for me. Bearish would be like the extremes kind of thing. Here down to what am I looking at? Let me zoom out. Yep, to there. Somewhere around 400. They'll be back up the truck kind of scenario. You got this order block here, which is confluent with your BPVR. Where is it? And I wonder if that's a retracement Fibonacci. Let me get rid of this because it's getting a look at it. Just curious. Oh, yep, that's your golden pocket. So I will extend this to here. And this will be my red zone. Yeah, I don't want to do red. You know what? I'll do red here. Okay. All right, so for bearish, looking straight down. Realistically, probably the weight. There is a moving, I'm sorry, there's a Fibonacci here, which is kind of nice because you could potentially just close this gap here and then bounce up. So that is pretty good. So maybe look something like that. Otherwise, I'm looking down here, which kind of coincides with this trend line going up.
Yeah.
Look at something like this. I don't know if that's valid though. Yeah, it's kind of iffy. I hate diagonals. Yeah, that's kind of what I'm looking at. So, welcome to screenshot that. Sorry if it looks busy to some, but that's how I do it. That's Tesla. You got anything else?
Nope. I hope not.
Let's see. I got a list here. Hold on a second. Facebook. Yes. Yes, Facebook. All right. I think that's FB. Yep. Okay. All right, Facebook. This one's, I'm probably gonna get hate for this, so I'm sorry. Not sorry. February, let's go to weekly. Okay, so what do we got here? I don't know if we have. Trend up. 4, 2. Okay. Let's go down to daily. So order block, let's see, 2, something around here. That's my bearish outlook. Now, if we go up here, this is what I'm seeing. So people may think that, again, it's, you have to match your oscillators with what you're doing. So I think this might be bearish, potentially, until it breaks up. I'm gonna leave it red, just for my opinion. These charts are for us. That's why it's not financial advice. So I'm seeing it as a descending triangle. And the way you play these, this is the extreme. It's where you take the pole basically, and where it breaks down. Let's say here. I don't think I'll go that far, but this is more of what I'm looking at. Somewhere around 200. And then we'll see. I mean, if you look at these highs, if it breaks that support, maybe on a wick, but I'd be looking at a weekly basis. So it could come down and then it comes back up to retest. So it is valid in that sense. But now it looks in log. Let me look at weekly. I should have done weekly for geometry. like a humpback. It's interesting. So
Actually, kind of looks like a T-Rex now.
throwing stuff up. Nah, I don't see any channels. Yeah, I gotta wait and see what happens. I mean, I don't know. This is looking down, so let's just go through a bunch of things, right? So what do we got? We got just throw a bunch of names, just so curious. So let's say
AMD.
Apple. AMD. Okay, I'll put in AMD. I just want to look at the weekly, so monthly, and then we can get a view of the broader market, I guess, more so than the index will show you. AMD, Facebook, Apple, we got Tesla. What are the big ones out
there? Google.
Goody. Oh, I think that's Alphabet, right?
ABC. Google's ABC. Yeah, maybe not.
No.
You had it down there. I saw it before in GOOGL.
I think it's. I thought it was Alphabet. Yeah. I'm not sure which one. Is it GL or no G? I mean no L. Now let's go with this one. Sure. Any other tech stuff?
I think Nvidia is kind of pretty volatile right now. NVIDIA.
This is why I have a watch list, so I don't have to remember them.
Let me see what else I have.
Got BYD.
Walmart.
BYD. Just for giggles, GME. What are the other meme stocks?
AMC, BlackBerry were the other ones.
This one?
I mean, we could. What's that?
Is it B? Which one is it? BB?
BB. Yeah.
Okay. And let's see what else.
So we're just doing weekly.
Yeah, I just want to get a sense of what's going on.
Yeah. I got some. What about Ali?
How do you spell that?
Alibaba.
Oh. Oh, Baba.
Baba. Yeah, Baba. I have a list here of the weekly top gainers. I don't know if you want to even maybe mess around with those at some point later on too.
Bring it on.
This one that I made a little bit of money off of LACO. That's that Chinese drone courier service.
So you broke out a little bit. How do you do a ticker?
Yeah, LKCO.
LK?
CO. Charlie Oscar.
Lucon?
Yeah, it's up 92% almost this week.
Give me two more.
Like random stuff, or you want big gainers, or
whatever you want.
Okay, let's see. Cisco is boring.
Let me do a financial. JP Morgan. Yep. Just to get a broader view. Is there like a real estate thing?
Do this one, SOS.
What is it?
SOS.
I've heard of that. This one. Okay. Okay. Well, let's do a quick rundown. So Facebook, you got my thoughts on that. I'm gonna stick. Hold on a second. I'm gonna stick to this until the top of this trend line of the descending triangle breaks. Okay. I am expecting higher, so I'm expecting like 280, but I'm still looking at this as a descending triangle. Because if I look at the monthly, let's see. Yep, you got a downtrend going, and decreasing in strength, so it's getting weaker. I don't know, potential top. We'll see. Let's look at Apple. Again, matching my oscillator. This is bad. Let's look at, so this is like a bearish thing where let's see if I, oh yeah,
Say
like right here.
embarrassing or a bearish thing?
Bearish.
Okay.
So like where it breaks down, it crosses down, and then when it retests, it gets rejected. Then you get a massive impulse down. Same here on the left. You can see another one here, and I guess that's it. No, here's another one where it tries to retest it. It gets denied.
So fast and the slow again. What is this in? I mean, I understand the lines, but I'm trying to decipher where those fast and slow values or those lines are actually derived from. Is prediction based or mathematically prediction based?
Yes, I can tell you offline. But
Okay. All right, that's fine.
I'm trying to, so I haven't done
This is something
before.
you created then.
Yes. So I haven't
Okay,
done
never
this
mind. Okay.
I haven't done this before as far as showing this in a video. So I'm trying to figure out how to explain it without giving away my edge.
That's fine.
But I guess I could say it has to do with price action, volatility, through volume strength, but not RSI, and Fibonacci, including, well, moving average is derived from price, so price based, and it's not moving average.
That's fine. I just was making sure I wasn't missing something that was more obvious than it should be.
Yeah, it's not.
No, we'll talk about it.
But it's kind of, that's how you would play it though. It's pretty straightforward, I think, but you can ask questions though, because I mean I'm used to this. I'm more familiar with it, so it's it may seem simple to me, but it may not to someone outside. Let me get rid of
You're not really using the median line though, right? I mean, it's just kind of there for, I guess, an average of the two.
this becomes more relevant when you go down to like a lower time frame. You're trying to scalp with options. So
Okay.
since this now it's in November, I've been just trading options. Before that, I was swinging and short-term swinging, long-term swinging. But now because
I thought we talked about this.
what's that?
You're talking about swinging.
Not that kind of swing. But like if you go, for example, Apple, if I go down to a 2 hour, that's how I would do it. So if I go down to a 2 hour, I'm looking at, let's say market open, right? So let's see, 8 o'clock, 9 o'clock. So this is where it opens, right? So I wouldn't touch this actually until you get maybe here, 12. No. Sorry, it's kind of hard. I need to prepare these better. 12.
I think maybe going forward, what we could do is pick the stocks. I mean, maybe if we do, let's say 10 stocks per episode or something, whatever, we have some number of stocks per episode. We could do a portion of them fixed, like the big popular ones. And then I think it's fun to kind of, well, I don't know, I guess we'll learn as we go, but pick like weekly gainers, like the big top gainers of the week. Like for the past 5 days, I'm seeing the biggest gainer is this CAN. And I've never even heard of these companies, but
yeah,
it's interesting. I'm part of me is curious, like what drove that, because it's not that some of these statistically it doesn't make any sense. So there has to be some fundamental point to it, which I'm curious about. It would be interesting, I guess, to see. And I guess we could also recap also on what we've done in the previous episode to see if it actually panned out or not, which I guess would over time prove out the analysis that you and potentially later on I am doing.
Yeah, definitely. So I was gonna say as far as scalping. So if you don't want to chase anything. So you have, there's an opportunity presented to you, take it if it's valid, if it's valid, but don't look for a trade, so to speak. Let the trade come to you. So if I'm staring at this, I'm seeing that, it's approaching a pretty heated moment here. It's expanding above the band, so you're probably going to come back down. If I see this crossing down, I'm waiting for a retest or at least a cross down below the bull zone. At this point is where I start to get interested. Sorry, let me narrow that down. Right here. Okay. So once I see that rejection, now I'm perking up. So I'm looking at the 4 hour. Now I go down to the 1 hour. And where'd that line go? There we go, right there. I'm not even looking at the price yet. Now at the 4 hour, you see that you have the signs of a downtrend, but you want to go down at a lower time frame to kind of pinpoint where that is going to happen, when you're going to get that pivot, because using options, you're chasing volatility. So once something breaks bear, I love playing bear because it happens faster, so it creates more volatility. You're so nice. So now this is going up, right?
Yeah.
4 hours starting a downtrend. So 4 hours composed of four hours. So 1, 2, 3, 4. So right around here is where your 4 hour closes. Okay. So this is where it turns. So now you're looking to try to test the upper, the bull zone. It's not going to break it because your higher time frame is going to knock it down. Unless you get a gigantic pump, which at that point you'll see it at a lower time frame, and I'll explain. So right here where it starts turning down, that's when I want to get in. Now if I go down to, so let's say this is the 1 hour in white, the 4 hour in yellow. I don't know, just picking random colors. And now I go down to, from the 1 hour, I go down to the 15 minute. Where are my lines? There you go. Okay, there we're here. All right, look away. Don't get a seizure. All right. So 15 minute. So this is the 1 hour that turned down, but you could see it before that. So actually, let me go back to the 1 hour. Sorry again. All right, so where it tries to come back up to the green, because I know the 4 hours trying to knock it down, the 1 hour is peaking up. That's where I want to find my pivot. Then I go down to the 15 minute. I keep hitting the wrong one. There we go. Don't know why it keeps doing that. And then the 15 minute, you can see the same thing that we were seeing on the 1 hour, the 4 hour, sorry, where you tried to retest up, but it failed.
Yeah.
So on the 1 hour, you're seeing the max approaching some kind of pivot. So the price goes down and tries to retest something. Now let's look at the price action. So I'm potentially looking at this area where it retests, and I'm speculating that you're going to drop. So I'm going to make that whatever that color is. Now let's look at the price. Okay, so now on your 15 minute, this is your 4 hour. Your 4 hour is basically giving you a heads up. If you're going to short, for example, your 4 hour is telling you I'm approaching some kind of rejection, I'm weak, so look for an entry. So now you look at this thing going up.
Story of my life. Oh, that was so funny. Yeah, sorry. I'm looking for rejection. I'm weak.
So you're looking for an entry. So the 1 hour, some could take this and try to short it, but I wouldn't. I would wait for the 15 minute signal, which is approaching a retest after rejection for the second time. So in the third time to go back up, you are going to expect a further rejection, and you can attest to that with the SCR, how it's expanding right around between these two lines. So you have a pivot coming. Now in the 15 minute, this is your retest area. In real time, we can hit replay. This is how it looks. Okay. So you don't have this line yet. You have this. So what are you gonna do? You're gonna wait for this to try to get above. You can miss your entry, and that's fine. Don't chase it. You can even go down to like a 5-minute. And you can see that it's crossing up. So that's telling you that you could potentially go a little higher. And I try to use my moving averages to show me. So this is kind of like the Tesla play, where we retest the cross down and then we drop. That's on this candle right here. Then you have to see if it tries to recover. So this is kind of bullish on this time period, the 5-minute. So now let's say, where's my bar? Okay. So I'm going to hit forward. Yeah. So this is my next candle. I'm gonna hit up the 4-hour into the 1-hour, then down to the 15-minute. I'm hitting play. So we get a candle every 5 seconds. So now I'm waiting for this. This is crossing up, so it's going to go up, right? What I'm expecting is a retest around this area and possibly a rejection. But I'm waiting. This is my 4-hour and my 1-hour. So my 1-hour is telling me that I need to go up. My 15 minutes telling me I'm going down right now, retesting the bear zone. I need to bounce up, cross down. You're hitting the 200. Oh, right there, that was your entry. So let's see, go back out. There we go. Higher low. Now you're testing it. Just watch it. There you go. That's your rejection right there. Your failure to get above. That's your entry. Right there, I would grab a short. Now I'm looking at the 1-hour. And I need this to cross. There we go. That was it.
Okay.
So I went a little too fast. Holy crap. What happened to that candle? That's a Darth Maul where it whips up and down. So
Jeez.
if I went back to where I put that line, right? So let's do 1 every 3 seconds. I'll go down to the 15-minute. And most people get shaken out, which I can understand. And that's why you got to follow your strategy. So I'm retesting the bear zone. You got to wait and see if it rejects. It went above it. So still watch it. Keep in mind that the downtrend is still possible because of the higher time frame. Second candle, if it fails to get above, which it did, that's your entry. Next candle drops a little. And the candle after that shakes people out. Like that. But it fails to go above. That's your stop loss. It didn't hit it. Next candle down. Good. You need to get below it. Nope. That stopped people out. But your high time frame is still bearish, right?
Yeah.
So I'm not selling yet. Okay, good. And now you can consider starting to take a profit. I would take my profit here. Yep, that's a bounce of the 200. I would take my profit there. It could go lower. I mean, it's really up to you. You can trail your stop loss too, as it did going lower. It all depends on how you play out your strategy, but this could happen before that. But even better. But my take profit would have been here, just not getting greedy. However, if you were to go in a higher time frame, how does this play out on a 4-hour, let's say? The 4-hour is still bearish. And what's worse is it looks like it's closing below, below 21. It's trying to save it. See, whenever price is about to cross, it tries to come back to save it, and that's where you watch it. Excuse me, to see if it stays above. If it doesn't, then you get deeper pullback. The cross is about to happen. Now you can see in sort of real time. Yep, cross happening. Then lower. Yep. That's what I mean with the crosses. And then you get a bounce probably around here. The 200. Nope. You got a bull cross here. So on this drop, I would have switched bullish until you get a retest of the bear zone here for a scalp.
Yeah.
If you're trying to swing a move, I would just follow the bull trend or the bear trend here. So for instance, here I would do a scalp. I wouldn't hold along until we're above the bullish zone. Now when this crosses up with the price above it, that's bullish. We gotta wait and see that. This will probably come down a little bit more. Still waiting for the 200 tap. May not get it then. Just watching the moving average. Let's go a little faster. All right, so next tick, one more. And this is your entry right here, where it dropped to retest it. Now you're staying on it. Daily's not looking good. This is not good. Daily's looking down. You got to cross. So your next tick is low. Now you got to retest. It's trying to stay above it. That was the little spike up, trying to save it. That's bearish. But now we're real time. Okay. So the problem is that since the price hasn't met up with the cross, it's kind of like a bear trap, so to speak. So your ideal signal as far as these crosses is that your price must meet up to it. And if it fails to get above it, that's the bearish signal, basically. If you're looking at retracement, I mean, you're kind of there. So there's not that much room. If it wants to be bearish, yeah, you need to break this this pivot here. But see how these lines are Fibonacci based. Like see how it's kind of crazy how relevant to become. Like price just met up to it near the exponential moving average. Bounce right off of it. And this is your pivot point. So once the price gets below it, if it fails to get above, it just moves down faster.